What is going on, everybody? Welcome to the bootleg market close. CrowdStrike, Broadcom, we're ready. We are ready. Do me a favor. Read the disclaimer. I am not a financial advisor. I am not your financial advisor. I just do a lot of research. We are going to be breaking down where the market closes, what won, what didn't win, and really going through CrowdStrike and Broadcom's earnings today. And we are live. Make sure you do your own due diligence. This is only for educational and entertainment purposes only. And with that being said, you know, this guy chirping, got somebody chirping. Hold on a sec. I don't know. Maybe he wants to chirp live. I don't know, but he has a link. He had a link the other night. He didn't want to come on. So we'll see. Thank you, everybody, for being here. Really appreciate it. I will try to, even though I know I will not be as entertaining as Amit, trying to get the energy levels up, trying to get ready. Thank you, Star, for being here. Chels, thank you for being here. Chef Mike. No, we're not late. We can't be late. Punctual. Gotta be punctual. Matt Money is here, but is he really here? Redley's here. What is going on, everybody? June is here. Ray is here. Oh, boy. Oh, boy. Oh, this guy's working from home today? Oh, boy.
I've been waiting for a man like Steve.
Double trouble. Everybody's in for a treat. Matt, are you able to stay to go through CrowdStrike and Broadcom and give the people what they want?
What, earnings or?
Yeah, they're reporting.
No, I wish I could. I can stay a couple minutes.
They're reporting. Didn't you see the title? The market closed, Broadcom and CrowdStrike earnings.
No, I get the notifications and I say my boy Stevie Boy is live. I gotta get involved in this.
Listen, everybody wants you to stay.
I wish I could.
You can push the meeting off. Don't worry.
Some of us work, Steve.
Listen,
you know? Not all of us are playing around on the internet doing God knows what.
Listen,
I'm just kidding.
I'm working for the people.
You are working for you're doing the Lord's work. I appreciate it.
I'm working for the people. I'm keeping everybody entertained.
Someone's Amit decides to go away. The new radio voice that Hot Steve's got and everything.
Listen, Amit decides to go away, go gallivanting. I said, no problem. I'll move.
He's got a roster of women that are after him doing God knows what.
Listen, I don't want to know.
All I know, I'm not going to speculate.
All I know is after we shot basis points last week, we walked for steak, and he sees a Chick-fil-A. He's like, well, let's get Chick-fil-A. I'm like, no. You don't put steak in my head and go for Chick-fil-A. No, that's not happening. I love Chick-fil-A. But if you had led with Chick-fil-A, you wouldn't have put steak in my head.
Steve, when are you going to take off your top?
You know what? Probably never.
Never?
I don't know. Maybe if I start lifting again, we'll see.
The people want to see it.
I mean, they want to see you take it off, not me. Not me.
I don't think so.
Ray, what's going on? Hopefully Michelle cooked for you by now.
Hopefully, is she withholding the
I don't know. I don't know. Ray told me he didn't get his chocolate croissant today, so I don't know. I don't know what's going on.
Wait. Ray gets chocolate croissants? I need to make a trip.
Dude, that's the rumor.
It's not that far away. It's not that far away.
That's the rumor on the street.
Ray, you got to confirm or deny this. Like, I'll be there tomorrow morning with some coffee. I'll bring coffee.
That is the rumor on the street. All right, let's get into, and it is 3:49. I do not know what time the earnings are coming in. I got everything up, ready to go. The Broadcom conference call starts at 5 p.m. That is up also. And let's see where we are to round out the day. We got SanDisk blowing it out. Are we going to get to 2,000 on SanDisk? Are we? I hope so. You want to know why I hope so? Because today is do or die for Steve.
Do or die?
Today's do or die for Steve.
That sounds very
Well, 2 out of the 3 companies that I have that are profitable in the stock draft report today. It is do or die for Steve.
What's going on with Micron? Hold on.
We're going to get there. Qualcomm is up 11. Meta Platforms. I told everybody that I thought that this was a good move. Hopefully the market's liking it. Up $25. The agents for business operations is going to be big. Mark my words. AMD up 21. Marvell up 10. Marvell crossing over 300. Exxon 153. Next decade 846. Micron making a move 1,087.
I'm up 15-16% of my calls.
I mean, you're up on your
and
calls.
Those, you've been watching. Those calls are not cheap. So 15%. I mean, it's not. We're not talking 6 figures, but we're talking some good money.
I mean, we're not talking Rocket Lab money, but we're talking money.
We're not talking that Stevie Boy Nvidia money, but
listen. But yeah, Micron's trying to make a move. 1,084. I mean, can we get to 1,100? Yeah. Why the hell not at this point?
Why not 13, Steve?
Why not 14?
Why not 15?
Why not 14?
Why not 15?
Altria Group, people smoking those ciggies. Marble Lights, 70.53. Chevron 190. The SMH 639. Venture Global 1247. Broadcom up 375. Heading into the print, we're at 485. This is either going to be 515 or like 400 when this is over. Oh boy. Reddit 169.36. Stevie has a decision to make this week.
Steven, you got a decision on that.
Got a decision. I got call options written at 167.50.
Long calls or short calls?
No, for this week.
Long calls or short calls?
Long call.
Steven.
I have 100 shares and I wrote a cover call against it.
No, that's a short call, Steven.
Short call. Fine. Whatever.
I mean, at 167.50, I don't think it's bad, but I think it could still run.
Well, we'll see what happens. It was in a way worse position yesterday and the day before. So, all right. Energy Transfer 1952. The Q 745. Tesla 422. Enbridge 56. The Googs 358. The Googs at 358.
I don't hate that because it gets more attractive by the day.
The market said, hold my beer. We do not care that we are issuing. Alphabet said, you know what? Check this out. We're going to add another $4.5 billion because we're oversubscribed. How do you feel about that?
On the Google coming back down? It was running a little hot. I'm not going to lie. Like, was I excited to see it tap 400? I liked it, but I like it much more at 350. I'd like to add a little bit more, so I don't have enough.
Cisco 126, Apple 310, Fortinet 146, iRen 65, Cloudflare 267, Amazon. This is disrespectful. I'm sorry, not sorry. Mr. Markey, you're out of your mind. Amazon at 249, how dare you? Who do you think you are?
I like it.
Listen,
I'm not done buying.
Right. No. From a opportunity standpoint, go to 200. But
they got some covered call, dude. I mean, these covered calls are printing money right now.
But from an aspect of reality and what makes sense, this makes no sense.
Easily 320. I don't know why it's not.
Easily 320. Easily. Amazon has underperformed the S&P over the past 5 years. Like, what are we doing?
Makes one of us.
Verizon, Microsoft down. Take-Two. You know what? If Take-Two keeps falling, oh boy, giddy up.
Even.
Giddy up. NVIDIA,
giddy up.
215. Is Black Leather Jacket Man sitting there backstopping? I think so. I think so, Matt. Nebius, 249. Salesforce fallen 190. Stevie's going to have to buy some more.
Are you going to buy more Nebius, Hot Steve?
Probably not.
You're better than me, all right.
Probably just
you already have a good amount, I think, right?
I don't have like a good amount, but I have some.
You feel like you have too much concentration in the other hyperscalers, or?
No, I just think that CoreWeave's a better value here.
Oh, okay.
SoFi, under 17. I think it's time to check if my spread's filled.
Steven.
Matt, I'm trying to be a degen.
The 30-40s?
Yes.
They get it?
How do I check?
You generally log into your account, Steve.
Oh, it's not filled yet. The bid is 96. The ask is 123.
Wait. 96 cents for that?
June 2028. You buy the 30, you sell the 40.
And it's 96 cents?
The bid is 96 cents and the ask is 123. I have a limit of 105.
Don't be fucking greedy, Steve. Just buy the shit. That's literally like, so it goes from like an 850% if it goes beyond 40 to like a 900%. Don't be greedy. Just let it go. Just buy.
Listen, if SoFi falls tomorrow, I'll be able to pick them up. Don't you worry.
All right.
Don't you worry.
I just don't want to hear,
you know what? I've done stupider things.
I don't want to hear little My Little Pony sob stories.
Listen, I've done stupider things. IBM 308. CoreWeave 111. Palantir 142. Rocket Money 114. Snowflake.
Oh man, might start buying again.
ServiceNow 118.
Yeah.
Zeta 23.
Can you believe that? Literally last week or last month, we were talking about $15, $16 Zeta.
I think Zeta is going significantly higher.
Are we live? I don't know. Does it say live? Does it say we're streaming, Steve?
Yeah, we're streaming. Why?
I don't know. Somebody said, are we live?
Yeah, we're live. Been live for 12 minutes and 30 seconds.
It's the market close, my guys.
The market close. 357. 357. All right. We're going to have to start watching, see what Broadcom and CrowdStrike do.
I just got a notification on my phone, Steve. What do you think? You want to know what it was?
What was it?
Ethereum below 1,800. When's Steve buying more?
Are you buying more? When's crypto winter over, Matt?
I told you, second half of 27, beginning of 28.
Crypto winter is going to last that long?
Steve, what do you think? It's like a quarter by quarter basis?
I mean, isn't crypto winter like a winter? I didn't think it was a fortnight.
No, it's like a Game of Thrones winter where it's like they talked about it for several seasons. It's like, oh, they've been talking about winters coming for 10 episodes. Like, it's got to be here.
Right. It's not. I mean,
I feel like we're in the midst. I think within the next couple months it'll be it.
All right. Broadcom is now down $1.66. CrowdStrike is down 20.67. It's down 2.69%. Whew. Look at this damn chart. Let's look at the stock draft real quick.
I know I'm getting hit hard on Rocket Lab. Yeah, winter's coming for 8 whole seasons.
Oh my God, are you kidding me?
Steve, you number one? What does it take for Steve to be number one?
Are you kidding me? Matt, are you ready?
I see that. I see you holding back a smile.
Are you ready for this? Amit and I are neck and neck.
Oh, how the mighty have fallen, Steven.
I'm closing in.
How the mighty have fallen. Today, and Hot Chris is coming up. What the fuck? Am I about to end up in fourth?
Matt was leading the whole time. It's coming down to the wire now. And Christopher Patel is rounding the corner.
I'm going to have to declare bankruptcy like I'm Steve Carell on The Office.
I'm coming for a Mitt. I'm coming for him.
Man, how bad is ASTS down today?
I mean, we can find out.
I know RKLB is down. Oh, it's not that bad.
Is that your computer or mine?
It's probably me.
Okay. All right. Yeah, the Broadcom call is not started yet. So yes, Matt. ASTS. I don't know.
Steven, you gonna ring that bell or what?
No.
Why? People complain too much?
I get fine. Where is it? It's behind my monitor. All right, the market is closed, everybody.
It's better than the Tinkerbell.
The market is closed.
Boo. See, and now I understand why Steve doesn't ring the bell.
The market is closed. Let's see where we're at. Apple 310, AMD 542. If it goes to 600, Lena's going to have a terrible sleep score. Amazon 250, ARM 411, ASTS down 8.9%. Broadcom leveling out. We are waiting. All eyes are on Broadcom. All eyes are on CrowdStrike. CrowdStrike is down 2.5%. Salesforce 190. Bitcoin under 66,000. Bitcoin, I repeat, is under 66,000. Ethereum 1801. The Googs 359. Hoodio Hood 8289. IBM is 306. IREN is 65. Meta 623. Microsoft 427. Micron 1082. The Nebius Crew 251. Service Meow 117.92. Nvidia 214. Are we going to get a pump? Qualcomm 249. The Qs 743, Matt. 743. QXO 1636. Reddit 169.49. Rocket Money 114.62. Siri 28. SoFi 1670, and my spreads did not fill. Uber 71.70. Tesla 423. Venture Global 1251. Zeta 23.28. How you feeling, Matt? How you feeling about this?
Feel pretty good, as always. Trying to be rich like Steve.
And I'm trying to be, I don't know what I'm trying to be. I'm trying to be something.
You gonna add to be a Benar, Steve?
I may be forced to.
What does that mean?
All right, there are no earnings out yet from Broadcom or CrowdStrike. Nothing on the wire yet that I am seeing.
Through the wire.
I am checking the websites.
Below $17, Steve. I think I gotta get a little bit more BM&R.
Well, you know what?
See, people shouting out Scam Lee.
Listen, you either believe in Ethereum or you don't.
I don't look for Steve's approval. I already have it.
Yeah, Matt could cut a Christmas album. I'll fund the studio time.
Start spreading the news. We got a little Verona?
What?
We got a little Verona?
It got a little pike. A little pikey pike.
A little pikey?
A little pikey pike.
Steve, you know what I've been about?
What do you think?
I go see my guapas downstairs at the Starbucks franchise store. Or is it a franchise? Whatever. License store. And I say, un americano con vanilla, por favor.
See,
Mediano.
You know what?
Mediano.
Such a
Steve,
beautiful
are we about to get? I'll translate in Spanish for you.
Such a beautiful language. I don't know a single word you just said.
We'll get a whole separate audience, Steve.
Dude, let's do it. I don't know what the hell you're saying, but let's do it.
You heard Americano, right?
Yeah, well, I know what that is.
Right. He's just like, oh wow. Lo siento, por favor.
Oh my God. Oh my God. All right. Broadcom is gaining a little bit in the after hours. It's up 235 in the after hours. CrowdStrike is falling. CrowdStrike was down $19.44 in the regular session. It is down $9.51 in the after hours. There's nothing on the tape. There's nothing on the tape, but it is down another $9.50.
Broadcom is?
No, CrowdStrike. We got two big earnings, Matt.
I made some money. When was it? Was it 24 or was it in 25 that it had that issue? That was in 2022? No, it was in 2024, right? Yeah. When would you buy some CrowdStrike, Steve?
I'd like to see the report. I'm on their website. It's not showing anything.
Speaking of cybersecurity, has Zscaler recovered?
Look, cybersecurity is going to do well. Oh, what the hell just happened? CrowdStrike is down 51.45.
No, it's not.
Yes, it is. It's down 7% right now, but I am not seeing the earnings anywhere.
64, 62, 59, 63. Looks like it might be accelerating, Steve. I mean, I don't know enough.
51.45 in the after hours at 4:05. It is down. There is nothing coming up.
I don't know enough.
Now it's down 68.53.
I wonder what it is.
It's dumping.
Almost down 9%, Steve. Oh, about to break 9? Yeah, there it goes.
CrowdStrike is dumping. Look at this.
Oh my gosh. Is it about to break 10?
It is dumping hard, ladies and gentlemen. It is falling.
Oh my, it might break 10%.
Oh my God. My dreams of winning the stock draft just got crushed. Crushed.
I'm about to start dancing, Steve. What does Ahmed have that?
Broadcom is basically just hanging out. CrowdStrike's the big one right now that's dumping hard. It's down 11.5%.
I don't know. Broadcom. It's all right. It's staying flattish. That candle after hours does not look good, but it's not 10% like freaking CrowdStrike.
All right, here we go. All right. CrowdStrike, non-GAAP EPS of $1.10, beats by 3 cents. Revenue, $1.39 billion, beats by 30 million. Annual reoccurring revenue is 5.79 for Q2 guidance. Oh boy. All right, hold on.
This is not enough.
No. All right, here's a press release. Where are we on? The candle's getting worse. All right. CrowdStrike achieves record Q1 net new ARR of $256 million, up 32% year over year. Delivers record cash flow from operations of $591 million and record free cash flow of $468 million. Raises fiscal year 27 net new ARR growth guidance by 520 basis points at the midpoint. Announces 4-for-1 stock split, ladies and gentlemen. 4-for-1 stock split. Let's see. CrowdStrike is also announcing that its board of directors has approved and declared a 4-for-1 split of the company's outstanding shares of Class A common stock in the form of a stock dividend. Each shareholder of record at the close of business on June 25th will receive, after the close of business on July 1st, 3 additional shares for every share held on the record date. So here's Q1 revenue, $1.39 billion, 26% increase compared to $1.1 billion in Q1 2026. Subscription revenue, $1.32 billion, 26% increase. Annual reoccurring revenue grew 24% year over year to $5.51 billion. Subscription gross margin. GAAP subscription gross margin was 78% compared to 77% in Q1 2026.
Look, they're not bad numbers, but I just don't think, obviously
it was overvalued.
Yeah, I mean, you're up even with the pullback today during market hours, and then the complimentary 8% down after hours. You're still up 43% year to date. So I mean, it's not to say that it's bad. I don't think it was a horrible print, but at the same time, you're running a little hot. It's time for a little bit of relief, and I think if it gets that and it continues up, growing at 25-30%, like the numbers just kind of posted were for Q2 and beyond, then I think you might be able to see a little bit more persistence going into the third quarter earnings. Sorry, the second quarter earnings. But
so CrowdStrike's module adoption rates grew 51%. Announced the launch and expansion of Project QuiltWorks, an industry-first cybersecurity coalition featuring OpenAI and Anthropic to remediate frontier AI risk via the Falcon platform. Launched the Charlotte AI AgentWorks ecosystem, a no-code development platform created with AWS, NVIDIA, and OpenAI to build and scale custom security agents on the Falcon platform. What else is interesting in this? Introduce CrowdStrike Falcon Data Security, a unified solution that discovers, classifies, and protects sensitive data across endpoints, browsers, SaaS, cloud, and AI workflows. Not seeing anything else that's that crazy. I mean, look, when you're doing, here's the problem. Where are we on? All right, so we're still falling. We're down almost 12%. Here's the problem with CrowdStrike. It's a big problem. The damn valuation sucks. There's no question about it. So they closed the day today at a market cap of $195 billion. And in Q1, they did $1.5 billion revenue, and they're not even guiding for $6 billion this year. I mean, that's a big price to sales.
I mean, I think you could always go higher, but I think it's a nice relief for the stock.
All right. Broadcom is still even Steven. We do not have anything. We probably have 2 minutes till Broadcom puts out their numbers. Broadcom is hanging out even Steven right now, while CrowdStrike is absolutely screwing me over in the stock draft. Amit may be running away with it. He may be running away with it.
I was wondering for so long.
You know what the worst part is on this? We're not even finding a bottom right now on this candle.
Not yet.
This could fall under 600. Like, I didn't realize the valuation was that bad.
I don't think the valuation's that bad.
It's pretty expensive, Matt.
I blame Bezos is right.
Wait, what happened?
I don't know. going to 325. People are saying. Ooh, SoFi is dumping after hours. Is it actually dumping, or is it down like 2 cents? And you're like, oh my god, it's going to zero.
So
down 0.6% is not dumping, in my opinion.
CrowdStrike, before the dump, was trading at 153 times earnings this year. I mean, that's expensive. All right, Broadcom.
Steve, can I ask a very serious question?
We're going to switch to Broadcom after Matt's very serious question.
It involves Broadcom. People are saying it's dumping. What do you consider dumping?
Well, right now it's down 6.8%.
Okay, yeah, that's dumping. Okay, so when people are saying it was dumping, it was down 1%.
It's dumping. We got a big candle.
That's a big candle, and it's accelerating, Steve.
That's a big candle. We got some velocity on it, ladies and gentlemen. We got some velocity on it.
That's dumping. Okay, when it's down 1% and people are like, it's dumping. I'm like, that's not 1%. Literally timing though, right? Like, had you?
Oh, it was nice while it lasted. It looked like I was going to make a run at it, and I didn't.
It's lonely at the top here, Steve.
Look at that wick. Oh my God. The AI bears are coming to the party, ladies and gentlemen. The AI bears are coming.
Oh, gosh.
What the hell did they just do?
It's tough being in the BBC, Steve. It's tough being in the BBC.
I don't have earnings yet.
Billionaire Boys Club, I just want to clarify.
Did you see that movie?
What?
Billionaire Boys Club.
I knew people were going to start out.
What?
I knew people were going to start chirping. I haven't seen that movie.
It's actually pretty good.
Okay.
It's not bad. I like it because it's based in like the 80s.
Steve, you've been stunting like the 80s.
Dude, the 80s are legit. All right, can we get earnings? Come on. Hit the wire. Let's go. I want to see how screwed we are. All right.
Your guys' mind is in the gutter. My mind is about that paper. Your guys' mind is about different stuff.
I don't know what the hell you're talking about, Matt.
I'm glad, Steve, because as you, I'm locked in.
All right. Broadcom, $2.44 of non-GAAP EPS. It beats by 4 cents. Revenue, 22.19 billion, beats by 70 million. Double beat. Board of Directors has approved a quarterly cash dividend of 65 cents per share, payable June 30th. Let's go through the entire release. All right, GAAP net income, $9.3 billion. Non-GAAP, $12 billion. Adjusted EBITDA, $15.24 billion. GAAP diluted EPS, $1.91. Cash from operations, $10.5 billion in Q2. Free cash flow, about $10.2 billion. Broadcom achieved record revenue, operating profit, and free cash flow in Q2, driven by accelerating growth in AI semiconductor revenue and strong operating leverage. Q2 semiconductor revenue from AI of $10.8 billion grew 143% year over year, above our forecast, driven by increasing demand for custom AI accelerators and AI networking. Wow. Wow, wow, wow. Quote from Hawk 10, the momentum continues, and in Q3, we expect semiconductor revenue from AI to grow over 200% year over year to $16 billion. Q2 consolidated revenue grew 48% year over year. Holy cow. Adjusted EBITDA increased 52% year over year, $15.2 billion, representing a 69% margin. I mean, why the hell is it dumping? It's still dumping. That's a big candle for what they just reported.
I think people are just hating on the market today, Steve. It was time to give
But
up.
it looks like
bit.
it's starting to get filled, though. It's now the wick. The candle has climbed back up the wick.
Yeah, it's halfway. There we go. Positive candle.
There we go. This is good earnings, people.
It might have been. It might have just been the algorithms.
That may have been fucking algos.
Because it was less than 1%. That's algos because it was less than 1%, and then as soon as the earnings came out, immediate dump, and it was probably just trying to be reactionary compared to what happened with CrowdStrike.
Broadcom.
Now that you have the real people reading into it, it was canceled. I thought it filled.
Broadcom achieved record revenue, operating profit, and free cash flow. Let me read that again. Q2 consolidated revenue grew 48% year over year to $22.2 billion. Adjusted
we're almost back to even,
52% year over year. What?
We're almost back to even, Steven.
Listen, don't call it a comeback. We're getting a green candle. Don't call it a comeback. These were good earnings, people. Get me back to the promised land. Let's go. CrowdStrike is still screwing me over. There is no promised land. We're starting to get a floor. I need a huge green wick right there. I got to get back to the promised land, everybody.
I don't know, Steve.
We're almost back on Broadcom. These were good numbers out of Broadcom, everybody.
Did you really say 48%?
What?
Did you really say 48%?
On what?
On Broadcom.
Yeah. Revenue $22.18 billion, up 48%.
There you
go. 48%. And adjusted EBITDA is up 52% year over year with 69% margin. Like, these are good numbers. I cannot wait for the earnings call. All right, so here's the guidance. Q3 guidance, $29.4 billion. And adjusted EBITDA margin is 68%. Whew. Matt, Broadcom's falling again. We're not hanging out on that wick, Matt.
Steve, it's only at the top. I don't know what to tell you.
We are not hanging out.
It's lonely at the top, Steve.
You know, Matt is listen. Matt may win. That's okay. All right, we're gonna give me a sec.
If I had Steve's money, I'd donate mine.
Don't do that. Don't use my lines against me. Do not use my lines against me. All right, we're going to cut over. Give me a sec. Hold on. Let's see what they have to say about Broadcom.
Revenue came in slightly light at $22.19 billion for the actual quarter. What happened is that they're split into two: semiconductor revenue and infrastructure revenue. Infrastructure revenue is composed of enterprise software, primarily VMware would be in that mix. That came in a little light. There was a miss there. So on the enterprise software side, semiconductor revenue came in ahead of estimates. And then for the Q3 revenue guide, it was only slightly higher than what the street anticipated at $29.4 billion. So that could be why we're seeing shares down over 5.5%, guys.
All right, Christina, thank you. Christina Partsinevelos joining us now. Stacey Raskin, Bernstein senior equity analyst, has got an overweight rating, $525 price target. Stacey, great to have you. Your take on the numbers?
Yeah, no, so the reason it's down, I don't think it's the quarter, which was fine. It was like in line and maybe margins a little better. And the guidance, the revenue guide overall is a little above the street. They guided 29.4, street was at 28.6. It's the AI guidance. So they're guiding 16 billion for Q3 for AI semiconductor revenues, which is a market increase over Q2. They did about 10.8 billion in Q2, but the street was 17, maybe a little more. And my guess is buy side expectations were a little higher than that. So that's why the stock is down. The thing is, it was always going to be lumpy. they are selling, the source of the big lift in the second half is probably Anthropic. They're moving from, originally they were going to be selling entire racks to Anthropic. They are now, which had low margin, they're now just selling chips, which have higher margin but lower revenue. So it was always going to be a little bit lumpier. What we'll be listening for on the call is their comments on 2027. So last quarter, they'd suggested that 27 AI revenues would be $100 billion. I think most people think that it's quite likely there will be upside to that. And I'm very curious to see if they take that number up, potentially materially, but we'll see what they have to say. That'll probably determine what the stock does tomorrow.
Yeah, I was going to say, do you have a sense, Stacy, of where that bogey is right now in terms of AI revenue for next year?
Yeah, so last quarter they said they'll be shipping, roughly 10 gigawatts of capacity and $100 billion ish in revenue, which would be about 10 billion a gigawatt, which is low. I think most people think they are closer to 15 billion a gigawatt, so it would put it probably closer to 150. And I don't know that they're ready to, go out that far at this point, given it's only June, but I do think that there's expectation that there should be upside at least to the 100 billion number that they gave.
Stacey, I'm curious, within your coverage universe, where does Broadcom stack up?
We like Broadcom. It's the compute names like the Broadcoms and the NVIDIAs of the world of actually they're up decently year to date, but I think Broadcom's up, I can't remember, 30 or 35% year to date, but the overall SOX index, the semi market, is up 90, maybe even more. And a lot of the compute names, have sort of lagged as investors have preferred to play the bottlenecks and the constraints instead. At the same time, none of the bottlenecks work ultimately if the compute names don't. And the Broadcoms, well, they're actually not expensive on like a realistic kind of number. And especially given all of the other supportive data points we've seen, especially around like the Broadcom TPU ecosystem, we like it. We like the stock.
Does it require the bottleneck trades, the memory momentum and all that to break, do you think, for investors to spill back the other direction? Because obviously NVIDIA, as you say, it's underperformed in a raging bull market. It's done okay on its own absolute level.
Yeah, I mean, people tend to always go back and forth between like favored themes, but at the end of the day, like the bottlenecks don't work unless the compute names do. I mean, the bottlenecks are working because they're building all this great AI stuff, and it's like, okay, for who, right? So ultimately, there's a divergence that I think is increasing. Like one of them is wrong ultimately. So that divergence I think is increasingly unsustainable over time. And so we'd like to don't get me wrong, I like some of the bottlenecks too that we cover, but we like the compute names as well.
Well, then who is wrong? I mean, you're saying one of them's going to be wrong, but you like both of them.
It's at some point I think they have to work. If the demand stays on the trajectory that it looks like it is on, I think they have to work at some. And it's not like they haven't worked. Like, to be clear, like they're up very nicely, like year to date. It's just lots of other things are up a lot more. That's all.
All right. So Matt, Broadcom is taking a dump. Great quarter, double beat, big numbers, big growth. There was a comment, and the comments are going so fast I cannot bring it up. But if NVIDIA couldn't break out on a much better quarter than what Broadcom had, is the chip play exhausted? What do you think?
I think it might be time for a breather, but I don't think it's exhausted. I mean, what does exhausted mean? You mean it stops out for a little bit until we get a little bit more news? We hear CapEx increases. Is that what you're saying? Or are you thinking that there's a 20%, 30% correction incoming?
No, I'm not saying that there has to be a correction. I'm just saying that, look, NVIDIA, my opinion only, should be between 250 and 275 right now. It's inexpensive at this valuation. NVIDIA couldn't break out off of the greatest quarter we've ever seen. Broadcom just put up 44% year-over-year growth, 146% on AI growth. They can't break out. They're going down. And they have tremendous growth going forward. Or do we think that chips are going to take a breather here? Now, I don't know. It's very interesting. And I cannot wait for this earnings call. You have Jensen coming out on Monday night and talking about AI factories are going to be between 80 to 120 billion. This will be the most expensive build out in human history. Everybody's going to be upgrading to Vera Rubin. You have Alphabet coming out and doing an $80 billion at the market offering, then increasing it by $4.5 billion because it's oversubscribed. Then you have Broadcom coming out with double beat, solid quarter, and nothing's really moving. I'm starting to wonder, what is it going to take for this ride to keep going? Or is this going to be chips kind of staying where they are and everything else catching up? What do you think?
I think it's time for them to take a breather, but I think all it would take is, a opportunity for Amazon, which is likely going to provide earnings towards the end of the month or early next. So, I mean, yeah, it might take June off for chips, but I feel confident that we're going to start to see a lot more volume come through for the chip names once you have these Mag 7 companies still reporting. And I think there was a really important comment on that news segment there, is that people, I think, are a little bit focused on 26 right now, but we're already in June, right? Give it another 2 to 3 months and people are going to start to think, okay, 26 is in the books. You kind of already have halfway through. You already have an idea as to what the first half of the year looks like. You have an idea how momentum is going to show up in the second half. What's 27 going to look like? And I think that is where people are going to really start to focus within the next month or 2 months when it comes to these chip plays. I think right now everyone's kind of focusing on, is the CapEx story for 26 over, what have you. And over meaning like there's not going to be further increases. I have a strong confidence that once you have some of these Mag 7 names show up at the end of the month, early next, that it's going to be game on again, and they're actually going to start to focus on 27 once we get to the third Q earnings, and you're going to be off to the races again, as long as everything kind of remains intact. And what your thesis about continuing CapEx cycle for the next 2-3 years looks like, I would anticipate that this is just a breather and it's not done.
Well, I want to address this. Not a double beat, Steve. Tell the truth and might still win. It was a double beat. Last time I checked, I knew how to read. Unless this is incorrect, we can clearly say non-GAAP EPS beat by 4 cents and revenue beat by 70 million. That's a double beat. Matt, am I reading this wrong? Is this a double beat or not?
I do see 2 green things of text, Steve.
That say beat, right?
They say Michael Jackson just beat it.
Okay, there you go. So if I have incorrect information, I apologize, and I'll be the first to admit that I am wrong. But from what I am reading versus the consensus estimates, this was a double beat. Okay.
People are
and look at breaking news
opting for something else about.
Look at breaking. Broadcom slides even as Q2 results, guidance top Wall Street's forecast. I mean, I don't know what to tell you guys.
Yeah, I don't know where people are copying and pasting this from, Steve. I don't know.
CNBC can read that they missed estimates. They may be looking at the wrong thing. I'm looking at this right here. Double beat. I don't know. I don't know what to tell you. Anyway.
Well, Steve, I'm going to have to leave you to it. I appreciate you having me on. You're the man, as always.
Man, where are you going?
Steve.
You don't want to listen to the call with us and hang out?
I wish I could, Steve. As you can see, I'm still wearing my lanyard.
I know.
I need to get out of here.
See, the fact that you're still wearing the lanyard makes me believe you're done for the day.
Why is that?
Because you're home.
No, I came home because I had an investor call that I needed to check in about. And I didn't want to take that at the office.
All right. Well,
I was about to say something.
You go do what you need to do.
Every day I try to be more, aspire to be more like you, Steve.
Listen, you should not.
I'm not going back to UDOC, guys. I have a date now. I did ask some chick out tonight, but unfortunately, she has family obligations, or she just hates me. Probably both. I wish Steve would go out to dinner with me, but
Well, that'd be pretty hard considering I'm on the other side of the country.
Take the PJ.
You know, that wouldn't suck. I'd still get in late.
No, I don't pull a Chris. I don't shut it down to go drop a deuce. I would take you guys with me. Just kidding. Oh. All right, you're the man. I'm listening, but I need to knock out a few emails and stuff before I call it a day.
All right.
Cheers, brother.
Later. All right, everybody. I'm excited for the earnings call. I really want to see what Hawk 10 says. Look, the numbers are pretty damn good. I'm happy to go to CNBC's website and see what they're saying. But on Seeking Alpha, it's saying a double beat. And on CNBC, it says Broadcom stock slips on disappointing software revenue. Weaker than expected revenue in its Q2. CNBC may have been expecting different. They are saying 22.19 billion versus 22.27 billion. That may have been what they were expecting. What Seeking Alpha has is obviously different, which I showed on screen. Regardless, revenue was up 47.9%. AI revenue was up 144%. Adjusted EBITDA was up over 50%. Big numbers, big numbers, big numbers. Big numbers. So now the question becomes, where do we go from here? Is this an environment where chips are going to take a breather? I don't know. We're going to have to wait for the call. On the call, Hawk 10 could blow it out of the park and this could go up. I mean, right now, Broadcom is not settling out. It's down 6%. CrowdStrike, almost 12% this thing is down. CrowdStrike, but in all fairness, I felt CrowdStrike was expensive going into this. This is not surprising. CrowdStrike isn't even going to do $6 billion in revenue this year. What is surprising is Broadcom, given the growth in the guidance. So pullbacks are healthy. Remember that, everybody. Pullbacks are healthy. And maybe people are deciding to get out because they need to raise capital for SpaceX and other things. We got Bitcoin falling to almost 65,000, everybody. Not that I don't think a lot of you care, but look, people are up a lot on Broadcom. People are up a lot on AMD. People are up a lot on chips. Is this healthy? Maybe. Where's Nvidia at? Is this taking Nvidia down a little bit? A little bit. Not really. Nvidia is actually holding its own right now. But keep in mind, what happened this week? Alphabet's raising $85 billion. They are partnered with Broadcom. Expect Hawk 10 to talk about that partnership. Expect him to talk about TPUs and what they're going to be building. The call is in 22 minutes. Well, Dougie, maybe. I mean, their messiah, Michael Saylor, sold some Bitcoin. It wasn't a lot, but oh, shit. Pardon my language. Pardon my language. We're going to roll the tape back just a tick. Hold on. Oh, this is going to set me off.
Of the first press conference in a few weeks' time.
Hold on if you can, and Andre, we've got some breaking news here. Let's get to Leslie Picker.
Hi, Melissa. SpaceX filing its amended S1 detailing that fixed price that we had been expecting and reported earlier today, $135 per share, as this company embarks on marketing what is by no doubt expected to be the largest IPO of all time, 3 times the largest IPO record holder here in the U.S., about $75 billion, because according to this S1A, SpaceX plans to offer 555.6 million shares in this offering, all primary stock here. So all $75 billion of this offering will go toward this company. None of it is from selling shareholders into this IPO. $75 billion, according to this S1A, what is likely to be the largest IPO of all time. But of course, they do have about a week and a half worth of marketing to do in order to assess what the final price will be, which will ultimately be decided next Thursday before a debut, which is expected next Friday, guys.
Got it. So, yeah, obviously nothing is final until the price is set as part of the deal, Leslie. Although it seems like this is a take it or leave it proposition. They're not going to mess around with a $4 price range that would only have changed the total offering size by $2 billion or so when you're got a market cap targeting of 1.75 trillion.
Right. Usually there's a bit of gamesmanship, a bit of psychology involved in this, where at this stage of the process, you would set a price range. And, the bankers kind of know that, they want to price it well. They want to price it toward the high end or above the range, because psychologically that will signal, oh, there's a lot of demand for this deal. This is a quote unquote hot deal that, will bring more people into the book. At this situation, according to people I've spoken with, there was so much testing the waters. And obviously, Elon Musk likes to do things very unconventionally. And so they basically said, no need to have that range, no need to have that kind of back and forth. How much would you buy at this part of the range? They just decided on a fixed price to market this deal that does give them flexibility to change it. Just because it's $135 per share now does not necessarily mean it will be $135 per share by Thursday, but it does kind of solve the size of the offering, which $75 billion, and then the valuation at this price point on a fully diluted basis, 1.75 trillion, which is also something I've been told is, the size of the offering as well as the valuation are two pieces that the company had been kind of aiming for. So the $135 per share, 555.6 million shares solves for essentially what they were looking to do with this IPO.
Right. Leslie, so they basically sort of calculated the fixed share price, or was there presumably some sort of testing the waters prior to setting a fixed price at this point?
Yeah, I asked sources, Melissa, because, Elon likes to do things with numbers. We saw what happened with the $4.20 per share that was offered. I asked if there was any significance to either 135 or 555.6. It sounds like there really wasn't, that it just was kind of how the math worked in order to get to $75 billion for that offering size. It was basically as simple as that.
I mean, the Google offering this week reminded me of when they did a secondary in 2005, and the number of shares was the number sequence to the right of the decimal point in pi.
Right.
So, I mean, sometimes you can have fun with these things. Elon seems not to be doing that in this case. I also do wonder, first of all, it's less than 5% of the total value to be floated here.
Yeah, it's about 4.2%. Float, which
this is a small deal.
Small.
We all know about NASDAQ going to put it in at maybe 3 times that, if the methodology is correct. So it's still not going to really be muscling around the indexes. I do wonder also if this reflects the idea. It's hard to imagine an investor who says, I'm willing to buy this thing at 134, but not 136. If you're going for the ride, you can't be precise about valuing a company that only has 25 billion in revenue and 1.75 trillion in market cap.
You're not thinking about today. You're thinking about 20 years from now. I mean, that's the bet that you're taking when you're buying SpaceX.
So much of this IPO, and this cannot be understated, is about the technical elements of it. It's people who are looking at the lockup calendar, people who are looking at the index inclusion calendar and the float size, and how they'll be able to increase the float over time to get a greater weighting in the index, which will create an onslaught of potentially forced buyers just because of all the people who need to buy and all the different products that need to buy as a result of its index inclusion. This is a very unique situation. It also paves the way for a slew of other IPOs that are also looking to be valued potentially, above $1 trillion in their IPOs. And so I would say, fundamentally, a lot of people look at this and they say 20 billion in revenue last year on $1.75 trillion. That is not more than 90 times last year's revenue. But when you kind of think about the technical elements of it, it feels like something that a lot of people have more FOMO about.
All right. This is crazy. 135 a share. He's doing this on purpose. I think that they're looking at this. This is my own opinion. Okay. This is my own opinion. I think that they're making this a price where people just get blinded by the share price and say Tesla's trading at 440 or 450 or wherever it is. I can get SpaceX for 135. Most people are not going to look at the valuation or the revenue or the net income or anything. I mean, am I buying this? Hell no. Does that mean it's going to go down? No. This could go to 250. I don't know. This could go to 250. Am I buying it? No, but I read financial statements. Like 135. Jesus, we should try to figure out what the volume is going to be on day one. I mean, Jesus. That's crazy talk. Absolutely crazy. I don't even know what to say to that. 135. I mean, come on. Whew. I'm still in shock. I am still in shock. Like, this thing does not do 100 billion in revenue. This thing is doing what is it? 19.5 billion revenue? Market cap of $1.75 trillion. How much of an Elon premium are we going to give this? I don't know what's going to happen. I have no idea. But I mean, look, this can definitely go up. 135 could turn into 200, 250 real quick. Real quick. Yeah, I mean, listen, would I be surprised if it goes to 250? No. Would I be surprised if it goes to 50? No. I wouldn't be surprised about anything. And how many people are going to sit there and try to scalp? Like, that's the thing that's going to drive this crazy. People are going to be bidding this up, trying to scalp on day one. Let's see where this fizzles out after a couple of days. Oh, Matt Money, thank you very much. You know what? Matt brought up a good point. I am going to give out some memberships. So give me a moment, everybody, before we get to the Broadcom call. And I'm going to give you my thoughts right now, but give me a sec. Let's get some memberships out there. All right. I just sent some memberships out. Congratulations to whoever got them. Congratulations. More will be given out either later today or tomorrow. I just got my influx of memberships to give out. So there you go. What price would I buy SpaceX? I have no idea. I really don't know. Yep, members only streams on Sundays at 1 p.m. 1 p.m. Bring your whole milk. Look, I don't know what price I'd buy this. I hate the valuation. This is more story than anything. I don't know. Yeah, it would say if you got one. Turtle, thank you so much. Turtle matched me and gave out 5 memberships. Thank you, Turtle. Really appreciate it. Really appreciate it. I cannot control who gets them. Star gifted 5. Star, thank you so much. Really appreciate it. You know what? Screw it. I'll send another 5. All right. All right, everybody. So 1 p.m. on Sundays, we do a members only. Sometimes we do one during the week. I try to make it the same time every week. Sundays at 1. We also do it sometimes during the week. Sometimes we do 2. But let's get back to it. SpaceX. I mean, if I put a 50% EBITDA margin on it at 19, call it 20 billion revenue, 50% EBITDA margin, 10 billion EBITDA. I mean, you're paying like, it's crazy. You're paying 17 and a half times EBITDA. That's crazy talk, in my opinion. Look, Meta does, no, I'm sorry, 175 times EBITDA. Meta is trading at such a low valuation that I cannot justify SpaceX here. I just can't justify it. And I'll show you exactly what I mean. All right, here we go, everybody. So right now, Tesla is a larger company than Meta by $50 million, roughly the same size. Okay, 1.58 trillion to 1.59 trillion. All right, here's the difference. Look at these numbers. Meta does more than double the revenue, more than 9x the gross profit, more than 10x EBITDA, more than 15x operating income, and more than 15x net income. Okay. And then we get to margins. They're not even freaking close. The Elon premium is disgusting. And I don't think SpaceX is going to be any better evaluation than Tesla at the end of the day. So when I look at it from a business aspect, when I look at it from you're paying for a company that is cash flowing and profitable, I'd rather buy Meta. Now, it may not be sexy right now like SpaceX, but you know what? These numbers for SpaceX are freaking crazy. They're crazy. I don't know. What can I say? I look at fundamentals. I look at freaking numbers. SpaceX may double. Like, don't get me wrong. SpaceX may double. But it's all on the back of the premium on Elon. That's all it is. I mean, the numbers are the numbers. And we don't know what the EBITDA of SpaceX is. I think I'm being generous giving it a 50% margin. You know what? Let's put a poll out. We got a lot of people here. Let's put a poll out. Start a poll. Are you going to buy SpaceX? Are you buying SpaceX at 135? And here's the problem. Too many people are going to look at this as it's a $135 stock, not a company that is valued at $1.75 trillion that's not profitable. That's the problem. People aren't looking at this as a business. I mean, I wish they would. All right, Broadcom is still not going yet. All right, we got a lot of people here. Let's get some votes on this, everybody. 72% no. 72% no. I'll tell you what, if SpaceX gets bid up and stays there, it's super bullish Rocket Lab. Tell you that. Rusty, thank you so much. Really appreciate it. Thank you, Rusty. You guys are amazing. Thank you. Thank you. 75% no. Okay. Daniel, I'm going to break it down for you, okay? I'm hell-bent on 135 share price because it's not the share price, it's the valuation on the market cap. They're issuing so many shares. The market cap is $1.75 trillion. This is a company that does not do 20 billion in revenue on the S1. This is a company that is not profitable. This company, the valuation is insane. It's insane. I'm still a Palantir shareholder. I've been a Palantir shareholder since 10. Keep that in mind. I didn't miss a generational run. I've been in Palantir the whole time. Now, did I have some calls? Yeah. But still a Palantir shareholder. Still have a lot of uncovered shares. We're at 75% no. We're going to close it out. 75% no. Shit. All right, we're going to do one more thing before we go into the Broadcom call. I hate getting political. I'm not going to get political, but we got to hear what they're saying.
Weekend, if there is a deal, but we should, caveat that the president's comments here were all very conditional. If the Iranians agree, if we get to a deal, it didn't sound, to my ear anyway, as if anything is imminent. But the president seemed optimistic and said negotiations are ongoing, Melissa.
And Eamon, was the issue of, Israel's actions and how that's going to influence the back and forth brought up during these Q&A?
Yeah, it was sort of a wide-ranging Q&A, and it bounced all around. And to be honest with you, there were real audio troubles, so we lost big parts of it. They've got a lot of RF interference in the Oval Office these days, so I can't say that it wasn't brought up. I didn't hear it.
Gotcha.
But it may have been brought up in those chunks that we lost in the Oval.
Yeah,
we'll get a repeat of it.
Target all around, I guess, Eamon. Yeah. Thanks very much. Well, let's get you up to date with tomorrow's trade today. There will be more earnings today.
All right. We didn't really learn most of it. Hopefully, good news comes out. I have no idea what's going to happen with that. SpaceX, whatever, 135, I'm not doing it. And we have a lot of really good comments here. Most people don't even know what market cap is outside of this group of people and people that actually follow the markets. They're just going to see a share price and they're going to say, well, I can buy 3 shares of SpaceX or 1 share of Tesla, 3 shares of SpaceX or 1 share of Microsoft. And they're going to choose SpaceX. That's fine. Whatever. We'll see what happens. We will see what happens. All right. Broadcom in T-minus 2 minutes. Hock Tan to the rescue. Let's take a beat and see where the big 2 and after hours are doing. Broadcom is trying to make a comeback. Look at that wick. Holy shit. Holy shit. Broadcom can reverse. We're only down 6%. Broadcom can pump on the earnings call, ladies and gentlemen. Look at that wick. I think they're just waiting for Hock Tan to come out and mention Google, increasing TPUs. We're starting to run into the earnings call. Wouldn't that be some shit? Oh, that'd be amazing. CrowdStrike, down. I don't think there's anything that they can say on the conference call to come back. We're not getting any big wicks on CrowdStrike. But you know what? That's okay. The AI revolution is in full swing. I care about Broadcom. That's what I care about right now. All right, Hock Tan. Wrong one. Missed it by 1. Hock Tan, let's go. If we can get this back to 480, that would be amazing. That would be absolutely amazing. We'll see. It's don't say it's not going up. It's starting to recover. I mean, it got down to around 440. It's starting to recover. Now, does it recover the whole way? Who knows? All right, we're still not live on the earnings call. It is scheduled for about 30 seconds from now. Hawk Tam, we got to do it. Can I make it bigger? Yes, I can, a little bit. All right, the music is still playing. We are waiting. Hawk-Tan, save the semis. Can make a song about that. Maybe Matt could sing a song. Hawk-Tan, save the semis. Let's go. All right, we're still waiting. Oh boy, he's lurking. He's a lurker, everybody. Lurker. Listen, I thought it was a good quarter. I really care about what he's going to talk about. Alphabet's one of their biggest customers with the TPUs. Let's see what happens. Huge amount of forward growth. Huge amount. And they still do not have it going. I don't know why. They don't have it going. I don't know what the hell's going on. They said 5 o'clock. It's 5:01. The hell's going on here? All right, hold on. Nope, it's still jazz music. I don't know. No bueno. Late like a mitt. I guess. CrowdStrike is down 92. Oh my God. Look at this. Look at that huge candle down. Craziness. Alphabet's only down 389, 354.50. They still, music's still going. They must not be ready. Maybe they can bring Jensen out on stage with them. That would be nice. Get a little Jensen action. CrowdStrike may recover tomorrow. I got no idea. All right. We are live. We're going to do it. We're not. They faked me out. They stopped the music. They faked me out. We're just going to bring it up on screen. We are waiting for the Broadcom call, everybody. We are waiting for the Broadcom call. Dougie, I don't know, man. You guys can't hear anything? All right, hold on.
After the market closed, describing our financial performance for the second quarter of fiscal year 2026. If you did not receive a copy, you may obtain the information from the investor section of Broadcom's website at broadcom.com. This conference call is being webcast live, and an audio replay of the call can be accessed for 1 year through the investor section of Broadcom's website. During the prepared comments, Hawk and Kirsten will be providing details of our second quarter fiscal year 2026 results, guidance for our third quarter of fiscal year 2026, as well as commentary regarding the business environment. We'll take questions after the end of our prepared comments. Please refer to our press release today and our recent filings with the SEC for information on risk factors that could cause our actual results to differ materially from the forward-looking statements made on this call. In addition to U.S. GAAP reporting, Broadcom reports certain financial measures on a non-GAAP basis. A reconciliation between GAAP and non-GAAP measures, to the extent possible, is included in the tables attached to today's press release. Comments made during today's call will primarily refer to our non-GAAP financial results. I will now turn the call over to Hock.
Thank you, G. Well, in Q2, revenue was a record $15 billion as we grew 79% year on year. Driving this growth was AI semiconductor revenue at a record $10.8 billion, up 143%. Oops, sorry. Well, let me restart, guys. Thank you, G. Thank you, everyone, for joining today. In our fiscal Q2 2026, total revenue reached a record $22.2 billion, up 48% year on year, above our guidance on strength in AI semiconductors. Q2 operating margin was a record 67%, and adjusted EBITDA was a record 69% of revenue, which was above our guidance. Even as our revenue scales up massively, driven by AI, our operating and EBITDA margins remain strong and stable. Turning to semiconductors, Q2 revenue was a record $15 billion, as I said before, as we grew 79% year on year. Driving this growth was AI semiconductor revenue at a record $10.8 billion, up 143% year on year, and above our outlook. Networking represented almost 40% of our Q2 AI revenue. Demand for XPUs and networking is simply insatiable. During the quarter, bookings for AI semiconductors were over $30 billion against the $10.8 billion we shipped. In the second half of 2026, we expect AI semiconductor revenue to double from the first half we shipped this year. Consistent with this trend, in Q3, we expect AI semiconductor revenue to accelerate to $16 billion, up over 200% year on year. For the full year 2026, we expect to achieve AI semiconductor revenue of $56 billion, up approximately 180% from fiscal 2025. Now, we expect this momentum to continue into fiscal year 2027 and reiterate our AI semiconductor revenue guidance to be in excess of $100 billion. We expect AI semiconductor revenue growth to continue in fiscal 2028 based on the following initiatives we have with our 6 core customers. As you are aware, with Google, we announced in April that we entered into a long-term agreement to develop and supply multiple generations of TPUs and AI networking. Our relationship continues to be strategic and very substantial as we continue to deliver vastly superior technology and execution compared to other alternatives. This ability to provide differentiated value to Google ensures that our business will sustain and grow for the foreseeable future. For Anthropic, as you know, for 2026, we are providing access to Broadcom TPU-based compute of over 1 gigawatts. In April, we entered into an agreement to enable Anthropic to access another 5 gigawatts of next-generation TPU-based compute beginning in 2027. For OpenAI, we have delivered silicon and we are on track for production late 2026. We have a contractual commitment to deploy 1.3 gigawatts in 2027 as part of the larger 10 gigawatts that by 2029 agreement we announced last year. For Meta, in April, we announced a partnership to deliver multiple generations of MTIA XPUs. And under this agreement, we expect to deploy 3 gigawatts through the end of 2028. The initial order for 1 gigawatt, which includes XPUs and our networking, has been received and will start delivery in the second half of 2027. For our other two customers, we expect shipments to begin late 2026 and accelerate into 2027. To date, we have received purchase orders totaling $6 billion. While we have significant IP and execution leadership in XPUs, networking is key to building scalable XPU and GPU clusters. And here in networking, we have at least one generation of technology and product leadership. For scale up within racks, we enable direct attached copper based on our industry-leading 200G and 400 gig SerDes, driving co-packaged copper with Ethernet and PCI Express switches. For scale out between racks, we have been shipping the industry's only 100 terabit Ethernet switch, the Tomahawk 6, for over a year. We will now be taping out our next generation 200 terabit switch this quarter. And in CPOs, which is co-packaged optics, 1.6 terabit DSPs, CW and EML lasers, we are the de facto standard in the industry. To extend AI clusters across data centers, we remain the industry leader with our Jericho 3 and Jericho 4 fabric solutions, and enabling the world's largest deployments at multiple hyperscalers. Our strategic vision is to bring together Broadcom's leading technology and investor partners with the strongest balance sheets to deliver at scale sufficient compute capacity at the lowest cost and power for the leading AI frontier labs, including Anthropic and OpenAI. To deliver this vision, we are creating the AI XPV platform with Apollo and Blackstone and other leading investors to deploy more than 20 gigawatts of compute capacity through 2028. The first tranche of this platform, valued at $35 billion, is in fact currently being launched by Apollo. Now, turning to non-AI semiconductors, Q2 revenue of $4.2 billion was up 6% year on year. Bookings during the same period exceeded $6 billion, which is a clear indication we are on the path towards a full cyclical recovery. Broadband, server storage, and enterprise networking together were up, partially offset by a seasonal decline in wireless. Consistent with this trend, in Q3, we forecast non-AI semiconductor revenue to be approximately $4.5 billion, up 12% from a year ago. In summary, we expect Q3 semiconductor revenue to be $20.5 billion, up 124% year on year. Let me turn to infrastructure software segment. Q2 software revenue of $7.2 billion was up 9% year on year, in line with our guidance. Bookings continue to be strong as we sustain ARR growth of 17% year over year. For Q3, we forecast software revenue to be approximately $8.9 billion, up 31% year on year. We just released VMware Cloud Foundation 9.1, focused on improving infrastructure efficiency, security, and support for enterprise AI inferencing workloads. With strong server demand globally, the deployment of VCF 9.1 for on-prem cloud computing is extremely strong, driving robust revenue growth. This release adds heterogeneous compute support across GPUs and CPU architectures, including AMD, Intel, and NVIDIA platforms, enabling customers, enterprise cloud customers, to run AI, Kubernetes, and traditional virtualized workloads on a common private cloud environment. So to sum it up, for Q3 2026, we expect our consolidated revenue to grow to $29.4 billion, up 84% year on year. We expect operating margin to be stable at approximately 67% of revenue, and adjusted EBITDA to be at approximately 68% of revenue. And with that, let me turn the call over to Kirsten.
Thank you, Hock. Let me now provide additional detail on our Q2 financial performance. Consolidated revenue was a record $22.2 billion for the quarter, up 48% from a year ago. Gross margin was 77.1% of revenue in the quarter, down 230 basis points year on year, as semiconductor became a larger proportion of our product mix. Consolidated operating expenses were $2.2 billion, of which $1.6 billion was R&D. Q2 operating income was a record $14.9 billion, up 52% from a year ago. Note that even with the decline in gross margin, operating margin increased 200 basis points year over year to 67.3%, as operating expenses remained relatively flat. Adjusted EBITDA of $15.2 billion, or 69% of revenue, was above our guidance of 68%. Now a review of the P&L for our two segments. Starting with semiconductors, revenue for our Semiconductor Solutions segment was a record $15 billion, with growth accelerating to 79% year on year, driven by AI. Semiconductor revenue represented 68% of total revenue in the quarter, and AI semiconductor revenue represented 49% of total revenue. Gross margin for our Semiconductor Solutions segment was approximately 70%. Operating expenses of $1.2 billion reflected increased investment in R&D for leading-edge AI semiconductors and represented 8% of revenue. Semiconductor operating margin of 62% was up 460 basis points year on year, reflecting our strong operating leverage. Now moving on to infrastructure software. Revenue for infrastructure software of $7.2 billion was up 9% year on year and represented 32% of revenue. Gross margin for infrastructure software was 93% in the quarter, and operating expenses were $1 billion in the quarter. Q2 software operating margin was up 310 basis points year on year to approximately 79%. Moving on to cash flow. Free cash flow in the quarter was a record $10.3 billion and represented 46% of revenue. We spent $231 million on capital expenditures. We ended the second quarter with $19.6 billion of cash compared to $14.2 billion in the prior quarter. We ended the second quarter with inventory of $4.3 billion as we continued to secure supply to support strong AI demand. Our days of inventory on hand were 86 days in Q2 compared to 68 days in Q1 in anticipation of accelerating AI semiconductor growth in the second half of the year. Turning to capital allocation. In Q2, we paid stockholders $3.1 billion of cash dividends based on a quarterly common stock cash dividend of 65 cents per share. Now moving to guidance. Our guidance for Q3 is for consolidated revenue of $29.4 billion, up 84% year on year. We forecast semiconductor revenue of approximately $20.5 billion, up 124% year on year. Within this, we expect Q3 AI semiconductor revenue of $16 billion, up over 200% year on year. We expect Q3 infrastructure software revenue of approximately $8.9 billion, up 31% year on year. Moving on to margins. As the proportion of AI revenue significantly grows in Q3, we expect Q3 consolidated gross margin to be down to approximately 74%. This decline in gross margin does not represent a structural change in semiconductor margin. Rather, it reflects product mix between semiconductors and infrastructure software. Regardless of the impact to gross margin, we expect Q3 operating margin to be 67%, which is flat quarter on quarter, demonstrating our strong operating leverage. We highly recommend that investors model semiconductor and infrastructure software margins separately to properly reflect the impact of changes in total revenue mix going forward. We expect the non-GAAP tax rate for Q3 in fiscal year 2026 to be approximately 16% due to the impact of the global minimum tax and the geographic mix of income compared to that of fiscal year 25. In Q3, we expect the non-GAAP diluted share count to be approximately 4.94 billion shares, excluding the impact of potential share repurchases. That concludes my prepared remarks. Operator, please open up the call for questions.
Thank you. To ask a question, you will need to press star 11 on your telephone. To withdraw your question, press star 11 again. Due to time restraints, we ask that you please limit yourself to one question. Please stand by while we compile the Q&A roster. And our first question will come from the line of Harlan Sur with JP Morgan. Your line is open.
Yeah, good afternoon. Thank you for taking my question. Thanks for all your support, Kristen and Ami. Welcome to the team. First, just a quick housekeeping item, Hock. On this fiscal year, AI sort of 2x growth, second half over first half, that would put AI revenues over $60 billion with sequential growth in fiscal Q4. But you gave us this $56 billion number, which is only like 1.5x, half over half growth with 4Q AI actually being down sequentially. So if you could just help us kind of square the numbers there. And then for my real question, back in December of last year, you talked about an AI backlog next 18 months, $73 billion. Market sort of took that number, spread that linearly over 6 quarters. But we know that the backlog is always more front-loaded over the first 4 quarters, right? And sure enough, you're going to deliver around 80% or more of that backlog in this fiscal year or first 4 quarters. Just given the strength of all your programs, the broadening of the customer base, accelerating year-over-year trends in your AI shipments, all the multi-gigawatt partnerships that you just articulated today, which is most of it, which is set to start to fire next year. Is it fair to assume that your 18-month AI backlog, second half of this year through first half through all of fiscal 27 sits at $200 billion or better?
That's a very complicated set of number questions. To begin with, let's start with 26. If you're doing a math, basically 2x to 2x, the first half, we ship about, in total AI revenue, something in the range of 19 billion. You're going to be precise. So if you do what I indicate and 2x that in the second half, you get to pretty much in the range of what we're talking about, which is around 56 billion. Harlan. So that set of numbers is still very, very, does tie up very well. Now, your bigger question on the second half, which you're going into a very detailed analysis of, is, yeah, we keep the momentum going as we expect to see in 2027. What we will see in 2027 is continued growth of the level we're talking about. And if you drive on that basis of what we're seeing here, almost 2x, in the range of 2x, what 2026 will be, I think you will easily see that 2027 will exceed very easily $100 billion in 2027, which is pretty much what we indicated last quarter, and we are continuing to say that it will be over 100 billion in 2027. So in that sense, if anything else, it might be based on what we're doing, very much on track, if not stronger. But we're not trying to guide you every quarter what 27 would be like. So we basically say it continues to be in excess of 100 billion in 27. But it is on the same trajectory as we are seeing in the back half of 26.
Got it. Okay. Thank you, Hock.
One moment for our next question. And that will come from the line of Blaine Curtis with Jefferies. Your line is open.
Hey, good afternoon. Thanks for taking my question. Hock, I wanted to ask you, inter-quarter, you had that 8K with the long-term agreement with Google. I think, obviously, you're probably not going to tell me what the total value is there, but I think there's a lot of concern about share within that customer. I was just kind of curious, now that you have this agreement, maybe you could speak to a little bit more in terms of your confidence. And if there's upside to that customer, is it a fixed amount or is there shares? Is there any way you can kind of add some color to that agreement that came out?
Oh, well, it's a very, very strong agreement, and it basically reflects the strength of the partnership we have, simply because of the products we do, the multi-general products, and the intellectual property we deploy into this whole program. To answer your question specifically, it's a commitment that is very substantial in dollars. Very, very substantial amount of dollars. Now, we also accept the fact that while we like to win every design in that program, we also accept the fact that given the growth of consumption of and development and consumption of AI compute, even by our partner Google, that we fully expect that there'll be some diversity of sources for them. But our commitment from them is a very substantial dollar amount.
Thank you.
One moment for our next question. And that will come from the line of Ross Seymour with Deutsche Bank. Your line is open.
Hi, thanks for letting me ask a question, and congrats to both Kirsten and Amy. Question on the gross margin side of things. I know, Kirsten, you talked about it going down due to the mix dynamics within the semis versus the software side, but given the strength on the software side in the quarter, it seems like the gross margin's falling a little bit harder. So behind the scenes, can you just talk a little bit about what the drivers within semis are? Is that the XPU versus the networking side of things? And is that trend likely to continue next year? Are there rack scale versus chip scale? All those sorts of dynamics, any color you could give on that would be helpful.
Yeah, certainly as our semiconductor business grows, just to reiterate, on a consolidated basis relative to our software business, you're going to have a decline in margins, right? A bit, right? You'll have compression. But remember that it's accretive because we have strong operating leverage, right? So our operating margins will stand up a bit over time to that. Within semiconductors, we've always said our ASICs, the TPUs, some of the wireless business has lower margins. So as the TPUs continue to accelerate, there'll be pressure overall on margins. But the connectivity side, the AI networking side of the business has very rich margins. So it'll offset it somewhat as we go.
No, I mean, Ross, as Kirsten said in her remarks, structurally, the semiconductor margins remains very stable and very solid. It's the mix, particularly the mix between software and non-AI to the very, very highly, rapidly growing AI semiconductor that is just diluting gross margin.
And the rack versus chip side of things, is that all clarified now?
No racks. It's all
in the
chips.
chip business only.
We only chips.
Only chips.
Perfect. Thank you.
One moment for our next question. And that will come from the line of Ben Reitzes with Melius. Your line is open.
Yeah, hey guys, thanks. Appreciate it. Wanted to ask about 2027, Hock. With regard to, previously you talked about the TAM being 10 to, well, it's kind of a longer term question actually. You've talked about the TAM being 10 to 20 and whatnot. It seems that one of your competitors talked recently about the TAM per gigawatt going up a lot, as we go throughout the decade. And it seems, it wasn't just due to infrastructure, it was due to the compute and networking components and other things. Perhaps you're familiar with the comment that Jensen made where the overall infrastructure is going from something around 50 something towards 100, and the compute content going way up. Are you seeing the same thing as you go throughout the long term? As that potentially being an accelerator, what you've already outlined in terms of your TAM per gigawatt, and how are you thinking about that? Thanks a lot.
Sure. Well, I think the accelerating part, if you talk about power, realize one thing is the dollars per gigawatt, the content dollars of racks per gigawatt, it's not accelerating that much because you are creating chips that each individual chips are driving higher and higher power. So you're driving less chips, though the ASP of each chip is going up in price. So dollars per gigawatt, billions of dollars per gigawatt is relatively stable. But the number of gigawatts will accelerate, as I think some of our remarks indicate. And that's what we are saying, that the amount of gigawatts required compute capacity as measured by number of gigawatts is growing very fast, and we're seeing that, and we are seeing that particularly to the point where for even two of our customers we're talking about, which is Anthropic and OpenAI, for which we're creating this platform to enable them to run sufficient compute power. We're talking about capacity as measured by gigawatt power that are way ahead of what we have expected, say 6 months ago. And that's just these guys. We've not talked about the consumption beyond the XPV platform we have announced here from our other customers, which is Google-owned internal workloads, Meta's workloads, and any other customer, and the other two customers that we have. So fold that in, and you're talking about gigawatts in totality. If you ask about 27 or 28, that will continue to grow. We expect, in fact, 28 to be a substantial growth from what we are forecasting in 27.
Thank you, Hock.
One moment for our next question. And that will come from the line of Timothy Arcuri with UBS. Your line is open.
Thanks a lot, Hock. I wanted to ask you about supply and kind of your ability to get incremental volume of wafers and HBM. As I look at some of your competitors, I mean, they're kind of able to drop, $20 billion out of thin air and get incremental, wafer supply. So I'm wondering, do you feel pretty good about, like, if a customer comes to you, are you able to get upside in terms of wafers and HBM? And are you beginning to consider maybe using other foundries to add more optionality to your supply? Thanks a lot.
Getting supply is not just about dropping money, Tim, though that does work. No, we are very comfortable that we have been able to secure supply of the types you mentioned about for our needs, 26, 27, working on 28 and 29 right now.
Right, but if a customer comes to you and wants incremental supply, are you able to go to your suppliers and get it the way that it seems like some of your competitors are?
Oh, customers have been coming to us incrementally over the last few months. Expect that to continue, and by and large, yes.
Okay, Hock, thank you.
One moment for our next question. And that will come from the line of Stacy Rasgon with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. Hock, you gave some gigawatt shipment targets for next year for your various customers. I just want to know, are those any different? Do they contemplate any change from what you said last quarter, where I think you'd said that was like close to 10 gigawatts you'd be shipping in 27? And can you just sort of help us shape the year? It sounded to me like you expected that to be more back half loaded in 27, given the shape of the ramps. But most importantly, is there any change? That is it more gigawatts or less gigawatts, or the same gigawatts versus what you were suggesting last quarter?
Well, good question. Yeah, for 27, we indicated about 10 gigawatts shipment in 27. That's still very much intact. They will be shipping 10. We're planning to ship 10 gigawatts in 27, and that nothing has changed. Back half loaded to that extent, yes, and which really provides an interesting trajectory into 28 with this back half trajectory. So 28, we expect a lot more gigawatts.
Got it. That's helpful. Thank you.
One moment for our next question. And that will come from the line of Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon. Thanks for taking my question. I was wondering if you could comment a little bit on the profile of your networking business, Hock, as we head through fiscal 26 and 27, about 40% of AI revenue this quarter. Will you expect that to sort of fall back down as some of these custom ramps ramp into the end of the year, into early next year? Or would you sort of expect to stay at the upper end of that range? And maybe talk about when you see some of the optical and CPO revenue becoming meaningful. Thank you.
That's a hell of a great question, Jim. It's just very difficult to answer because of how do we predict that? Because there are quite a few moving parts there. One of which is, to start with, is as our volume, as more and more of our customers turn to XPUs. Obviously, XPUs uses very much a lot of our networking components across the board. So that's great for us, and that drives increase in consumption. But it also means that we have been able to sell networking to non-XPU footprints. So that part of it would dilute the growth rate. And this 40% I consider as a very well, almost a situation where stars are aligned, where we're shipping a lot of networking to non-XPU, while the growth of XPU are obviously allowing us to grow this networking business to our XPUs, and we get to 40%. But I see that as probably as high as that percentage of total AI revenue would go. Not the first time I indicated that. The more expected percentage as a share of total AI revenue for networking would be closer to around 30%.
One moment for our next question. That will come from the line of Tom O'Malley with Barclays. Your line is open.
Hey, Hock, thanks for taking the question. So I noticed with the most recent deal with Anthropic that you guys are using Broadcom chips as a backstop for the deal. Do you expect more deals to come like this in the future? And then as you start to see the AI environment, is there any way you're thinking about financing in the future? Are you going to continue to do it with chips or anything that you can offer on that? Thank you.
Can you repeat that question, especially at the front end? I didn't quite get what you're saying here. I don't want to answer the wrong way.
Sorry, Hock. Essentially, most recent deal with Anthropic is being backstopped by Broadcom chips. Do you think that in the future you will see more deals done this way? And then any comments on the future financing of deals with the large AI models? Thank you.
Oh, I have to correct you on that. I'll deal with Anthropic, and that we basically talk about and basically disclose in our 8K recently. As the deal we did with Anthropic is we use our TPU chips that we develop to provide the compute capacity to Anthropic. We want that it wasn't backstop in that sense. We were the ones providing the chips to Anthropic. We were the ones providing the compute capacity to Anthropic.
Thank you. One moment for our next question. That will come from the line of CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thanks for taking the question. I guess, Hock, in recent years, you've talked about really focusing your efforts on very large XPU platforms. And I'm just curious, we're seeing many kind of XPU attached derivatives, across interconnect, storage, other. And I'm wondering if there's any sort of programs there that are more niche that are whetting your appetite.
Well, no, I don't think so. I think our business model is actually very, very straightforward, which is we are developing XPUs, custom AI accelerators for use by our customers who are pretty much all LLM developers, whether it's for training or inference. We are also creating a portfolio of critical components to enable these XPUs and even GPUs to be clustered and for better performance. And that continues to be the model we do, which is we provide chips, technology in the form of chips, whether they be AI compute accelerators, we call XPUs, or networking chips that cluster them together, be it switches, PCI Express connectors, DSPs, lasers, NICs, and routers. And that's very much still the model we employ in semiconductors. And we still, as you can see, our financial model and the program we go would drive towards a chip business model through the technologies we provide. What we're doing to enable some of these LLM players to be able to get access to the volume of compute capacity, the large gigawatt of compute capacity they need to scale up their models, is we are, as I announced here today, creating in partnership with guys with the best balance sheets around, a vehicle to basically have these chips funded for these LLM players who otherwise might have difficulty getting access to our technology, which provides them with the lowest power and the lowest cost.
One moment for our next question. That will come from the line of Atif Malik with Citi. Your line is open.
Hi, thank you for taking my question. I have a question on infrastructure software business. Are you guys seeing any impact of AI, agentic AI, on your software growth and renewals? And if you can just talk about some sort of long-term growth for that business.
Well, we're not seeing it. If anything else, as I reported, the high volume of core count of CPUs selling together with GPUs is driving some accelerated growth of our VMware business. And as you can see in Q3, we're seeing an accelerated growth, and we expect that to continue, I guess, for the next multiple quarters as this demand picks up. Long term, given the kind of products we do in infrastructure software, very, very close to literally the hardware, basically the hypervisor, which is where our products are. We do not expect to see any impact on software products.
And one moment for our next question. That will come from the line of Edward Snyder with Charter Equity Research. Your line is open.
Thanks a lot. Hock, this is very interesting because the gigawatts that you got laid out for the different customers, it's very clear that the two that are offering kind of CSP, I don't want to say CFC, but consumer versions of AI, Anthropic and OpenAI, have very large gigawatt commitments in the out years. I know part of that's catch up because they've just started late, where your oldest customers have been doing this for quite some time. But even part of Google's is offering cloud services to other folks too. So are we seeing a shift here? I know that initially a lot of the XPUs and the AI services were through the hyperscalers for their own customer workloads. We've talked about that ad nauseum. And now you're seeing AI finally hit the enterprises, and you're seeing cloud take off with the programming, which is sweeping everybody. Can we expect then that there's going to be this big second wave of demand that's driven as AI starts hitting enterprises and as consumers start getting access to it or finding usable tools? Because the numbers you're saying here are significantly different for the two classes of customers.
Well, that's a very interesting thought here, and you may be very well right that enterprise consuming AI is still relatively at an early stage of the game. But having said that, what we're also seeing is a lot of what the enterprise is consuming on tokens. They are buying a lot of these tokens from the platforms, the product API platform, APIs they pull from the platforms of this same name of customers we talked about, which is Anthropic, OpenAI, Gemini. These are the large guys they're pulling it from. And that's where I think substantially most of these tokens consumption are tied to those LLMs. And these LLM guys, as they productize their frontier models, whether it's be Opus 4.7, ChatGPT 5.5, or Gemini 3.5, comes back to the same end demand on compute capacity we provide to all these guys. And so even a growth of enterprise demand that we're now starting to see as enterprise starts to consume AI tokens for their own workloads, for their own productivity users, as consumers do. They're buying from the same source, these same few guys. And that's what's driving this very large, I call it insatiable growth in compute capacity that we are experiencing. And we see that continuing to happen now through 2027 and what we're seeing now through 2028 as well. So this is getting to be quite a sustainable and steepening trajectory of demand.
So if I could, doesn't this change the dynamic of what we talked about before? And you talked about seven or so customers for your XPUs, but if this is actually happening, you're already seeing it, Google offering cloud services for TPUs. It opens up XPU access to all those smaller companies that don't kind of meet the criteria for doing their own ASICs that you couldn't partner with to Broadcom's technology through these platforms. Why would that not be the case?
Well, I guess the answer to that is it's possible, but the reality of the whole issue is this: the compute capacity, most of the AI generated are provided in the form of SaaS models. APIs are pulled from the clouds, whether they're from Bedrock, Vertex, Azure, or the first party it is still provided in the cloud. So most of all that demand at the end of the day in terms of compute capacity, which is what we're doing, comes from those few large frontier model developers and the products they generate to supply to consumer and enterprises globally. Source of demand comes from those frontier model labs who are developing the products which consumer and enterprise like you and us and our companies are consuming. And what we're doing is providing that capacity to that demand source, as opposed to going to a company or bank and trying to provide them XPUs, and then they having to try to build it, create a software stack to then write application and run it themselves. I'm sure there are a few enterprises doing now, but there are not many. It's early stage in that whole game. Right now, most of the demand are coming from the frontier model players who are creating products. Things, as I said, like code assistants, like, engineering verticals, which are really coming from the same source of guys who are doing all those few guys doing the frontier models. It's not really coming from 100,000 companies directly trying to buy XPUs or, for that matter, GPUs. It's not.
One moment for our next question. And that will come from the line of Joe Moore with Morgan Stanley. Your line is open.
Great, thank you. You talked about $30 billion of AI bookings in the quarter, which is a lot, I guess, relative to this quarter and next quarter shipments. Can you talk about the dynamic? Why is there so much backlog now? Or is there, you sort of said you can react to upside with supply, just, why so many bookings this quarter relative to revenue?
Well, that's a huge demand of compute. See, a lot of our these few 6 customers now, they realize that lead time to get compute, you need lead time. You need to be thoughtful. And that's not just asking for wafers to get the chips or memory to ensure that HBMs are available or DRAMs available. They're also talking about, hey, I got to have the power shell. So all this is planning ahead. And what we are seeing, the bookings that are coming, is not for immediate delivery. Some are hope to have, But the reality they all accept is they need to align quite a few other things in place before they can deliver. But they are placing their orders early, and they're placing their orders now, and they are placing their orders in fairly huge demand, which basically gives us a lot more visibility than we normally otherwise would have in semiconductors. Our visibility runs all the way to 2028 right now. Just 3 months ago, I can tell you visibility ran pretty much 27. Today, it runs to 28. And that's a big part of the reason why we are creating this XPV platform as really the platform to plan to build up this, put in place such capacity for those frontier model customers of ours who are seeing, as you guys are seeing in some of the financials they are telling you and in the experiences you have, which is driving huge amount of consumption of tokens from those compute capacity we are giving them. We have the benefit now of a lot of lead time, and we're planning that. And it's not because of shortage of our components, it's also the other elements that need to be put in place, which particularly relates to power and connection into an infrastructure globally, or through America at least, that enables inference to be distributed through to consumers and enterprises throughout the country. So we're just getting a lot of lead time.
Very helpful. Thank you.
Thank you. We do have time for one final question, and that will come from the line of Joshua Buchalter with TD Cowen. Your line is open.
Hey guys, thank you for taking my question. In the past, you've talked about sort of $15-20 billion per gigawatt of compute, and given the 10 that you implied is what you'll be doing next year, it implies a much larger number than the $100 billion. You've also mentioned that the value per gigawatt does vary per project. So I guess how should we think about the evolution of your revenue per gigawatt over time? As I would expect on one hand, den-to-den pricing to increase on programs you're already shipping, but also there are other projects that are entering the model. Thank you.
Our revenue, our content per gigawatt will increase, put it simply. And our content from the fact that our compute chip XPU will go up in price very dramatically, particularly when you not only put SRAMs into it, sparse cost, you start putting embedding CPU costs into the same XPUs and making those chips basically multi-die with lots of HBM. So the trajectory of content increase will go up. It just doesn't go up every month, every 6 months, or every quarter, but it will follow one generation to the next, that the content will grow per gigawatt.
Thank you.
Thank you. I would now like to turn the call over to Ji Yoo, Head of Investor Relations, for closing remarks.
Thank you, operator. Broadcom currently plans to report its earnings for the third quarter of fiscal year 2026 after close of market on Wednesday, September 2nd, 2026. A public webcast of Broadcom's earnings conference call will follow at 2.
All right, we're not listening to that part. All right, here's the take, everybody. Let's see. First, listen, I think I need to make all you laugh real quick. Look, Hot Tan, we know what we're getting into when we listen to him. It's not as exciting as listening to Jensen, all right? But it's very important. So I feel like I need to make everybody laugh real quick. So let's do that, then I'll give you the take. Tanner and I will be going live tonight, and I am considering using this for the thumbnail. What do you think? I think it's hilarious. Tanner found it funny. I think I texted it to him. Captain Sleepy Time, me reading him a story. I don't know. I think I got a good sense of humor. I was trying to get Jensen walking down the hallway. We're going to try to make that happen. Tanner and I will be at, I know he looks tired. And you know what I'm going to do? I'm going to put little bubbles here with like my sleep score was 74 or something. We'll do something about a sleep score. Oh, yes, I need a table with a glass of milk. All right. Tanner and I will be live at 8 o'clock tonight. 8 o'clock. Here's my take on Broadcom. We got what we signed up for. They discussed how much more TPU capacity there's going to need to be. Right now, look, we can't control the markets. We certainly can't control what's going on in the after hours. Broadcom is down so much right now. It's down. It's starting to come back a little. It's at 422, though. Did the bleeding stop? I don't know. Here's where I'm at. Over the next several days, I am going to be watching to see where the forward EPS is. The numbers have not updated yet, but heading into the print, okay? These were the numbers heading into the print. Broadcom was trading at 20 times 2028 earnings. 106% EPS growth over the next 2 years. I'm expecting this to go up considerably. And keep in mind, this is what a 479 share price. We're at 422 right now. It just got a lot cheaper. I do not have a position in Broadcom. Okay. The website's my own proprietary system. It's not a website. It's my server, real-time information, blah, blah, blah. I am not a shareholder in Broadcom. 420, I'm getting really freaking excited. So I want to see what happens tomorrow morning. I want to see what happens the next day. I want to see if it sells off, if it starts to get a rebound. I want to see where the re-rating on EPS is. But the numbers were strong. Let's not forget. The reality of the situation is Broadcom just grew its revenue by 44%, I believe. Hold on. 48% year over year just grew its revenue by. The adjusted EBITDA, $15 billion. They have a huge margin, and it's a strong guide, in my opinion. They're guiding for $29.4 billion in revenue as 68% adjusted EBITDA margin. Listen, I'm not bearish on this. Broadcom ran into the print. Some would even say it was trading at a big valuation. It's trading a lot cheaper. Look, the real question is, where is all the capital being spent? Let's call a spade a spade. Alphabet is not doing an $85 billion capital raise not to buy TPUs from Broadcom. Amazon is oversubscribed and they are a partner of Broadcom. Meta is a partner of Broadcom. Broadcom's going to do fine. The question becomes dollars and cents in valuation. I'm not worried. And Striper Kid is up 175%. That doesn't suck. Doesn't suck. So, this is where I'm at. Maybe we go down tomorrow, maybe we don't. But when I see what the new numbers are like, I may become a shareholder. Broadcom's been something on my short list. You either believe in the AI revolution or you don't. I think the numbers are going to be good. So we got some news tonight. We have SpaceX at 135. I think that's crazy. I think that the capital being spent from the hyperscalers, Broadcom's going to be a big beneficiary. We're seeing a ton of implications that that's the case. So we're going to see what happens. But that was the call. CrowdStrike, disappointed. No question about it. Personally, I think CrowdStrike's expensive. I don't think Broadcom is expensive. I think that Broadcom is doing what it needs to do. Cash from operations, $10 billion plus this quarter. There's a lot to like about this company. We'll see what happens. We will see what happens. I'm not bearish on this ticker. You're crazy. You do not have a position that's bearish. I can't own everything. I have a really large position in NVIDIA. I've been waiting to get into Broadcom. I bought IBM well under where it is, by the way. I didn't say IBM is cheap where it is. I said it's cheap where it was, and I bought it there. So I think CrowdStrike is overvalued. So what do you want? Not have a position is not bearish. I mean, it's not. You can be very objective. Yeah, I have a lot of things. NVIDIA, Amazon, Microsoft, Meta, Alphabet, Apple. I mean, I own a lot of stocks. I've been waiting to get into Broadcom. I think I'm going to get my opportunity to get in. I like the earnings. I thought the earnings were really good. I mean, it's hard to get upset about these earnings. So we'll see what happens tomorrow. Tomorrow's a new day. Tomorrow is a new day. Tonight, Tanner and I will be breaking it down. I may buy in this week. We'll see. I may buy in this week. I don't know. We got to see. You know, Justin, I don't know. It is what it is. What's Marvell doing? Hold on. I wonder if Marvell got beat up. Marvell is actually up after hours, 21 cents. Staying. It is staying where it is. All right. NVIDIA, we're going to do one final check of everything before we call it for now. So hold on. All right, in the after hours, we got Cisco up a little bit, Costco running, Venture Global and Enbridge and Walmart up. Thermo Fisher is up, Apple is up, Pepsi up. Amazon 250, that's being disrespected. Microsoft 427 being disrespected. Big losers right now. NVIDIA 214, Tesla 422, Meta 619. SoFi keeps going lower, 1655. Qualcomm under 250. Palantir 141. Salesforce 188. Holy shit. Wild. Robinhood 81. Snowflake 237. CoreWeave 109, everyone. Zeta 2278. AMD 531. SanDisk 1790. Micron 1055. Service Meow 115. Reddit 165. Vertiv 323. And the big red, Broadcom 421. Cloudflare 255. ARM 398. It is what it is. It is what it is. Stocks do not just go straight up. Keep that in mind. Marvell is now down 10 in the after hours. It is what it is, everybody. We will see what happens tomorrow. Look, this is why I keep dry powder. I got a shopping list. Maybe tomorrow's a day I deploy some of that capital. We'll see. We will see. All right, everyone. Go get some dinner. have a glass of milk. I will let Amit know all of you said hi when I talk to him later. Tanner and I, Captain Sleepy Time himself, 8 p.m. tonight, we'll be breaking down the AI revolution. Thank you for hanging out, everybody. Really appreciate it. I will be live tonight with Tanner at 8. Tomorrow, I will be regular time, 11:30, same with Friday, but I will do the market close tomorrow and Friday to make up for Amit not being here. Thank you all for being here. I truly appreciate it. Look, we didn't get the rip that we wanted. It's okay. Maybe we're going to get Broadcom in a much better valuation. See you all in a couple hours. Thank you so much. You guys are the best. Have a great night.